Hey friends, Tyler Jeffcoat with Seller Accountant here. Hope you're having a good day. I want to talk to you about the question that I feel like I get most often. I'm on, several podcasts a month, it seems like, or webinars or speaking at conferences. And it seems like every host of these different shows or podcasts will ask some form of the question, what are the biggest mistakes? What are the biggest financial errors that you see when you deal with Amazon sellers? And I think when I give answers, it may depend on which show I'm on, but the 5 that come to mind today that I want to share with you are these. You ready? Here we go. First, they focus on sales, which is vanity, instead of focusing on profit. Sales is vanity, profit is sanity. It can be really easy, even if you go to a trade show or a conference, to talk about my sales. I've got $1 million company. I've got a $2 million company. But unless you're making money, profit that you get to take home, you don't have a business. You've got a really expensive hobby. And this applies to your business on the macro. Does my company make money? But it also applies to my product line. So do I have a product line that is an effective use of my precious capital, energy, risk, headache? Or do I need to apply those resources elsewhere, right? First one, please don't focus on sales, focus on profit. Number 2, it's easy and tempting as a seller to expand your sales channels or products either too quickly or not quickly enough. In other words, just not appropriately. And so some guardrails that I want to give you here is if you have a hero SKU that is really successful, you should try to find some variations to expand that product line. If you've been really successful on Amazon and your brand can lend itself to direct to consumer, you should eventually expand into a Shopify site and try to build your own customer base. Here's the caution though. With the new influx of private equity via the aggregator kind of phenomenon that we're seeing right now, you can actually get punished for having ineffective channels or having ineffective products, right? And so, the math has changed. Now having 100 SKUs is not really better than having 10 SKUs. Having 10 SKUs is fine as long as they're all producing. Same thing with your sales channels. Having 3 sales channels used to be really, really good. Now it's kind of, maybe it's better. And here's the rule of thumb we use for our CFO clients here at Seller Accountant. If you can build a sales channel that can be at least 10% of your sales. In other words, don't half-ass it. If you're going to build a website, do it right. Really have a goal of having it be an important part of your portfolio so that you're selling your future investor an actual asset instead of selling them kind of a pain in the rear, right? And same thing with SKUs. If I can really see this SKU getting to a point where it's an important augmentation of my portfolio, do it. And obviously you don't always know whether it's going to work or not. So just be ready to kill the SKUs that don't work. That's the simple thing. So that's the second thing, is expanding poorly. Third thing is not having any cash. So the financial errors that sellers make, one is, focusing too much on sales instead of profit. 2 is expanding inappropriately. And then 3 here is not having a little bit of cash in case you have a hiccup. What if you have a shipment that's really late and you miss out on some sales, or you have some extra expenses or tariffs get doubled? I mean, all sorts of things can happen. Or you bet wrong on an advertising campaign and end up losing money on it. Anything like that can happen. And if you don't have a little bit of capital margin in your business, not a little bit of a rainy day fund, you can be in a lot of trouble and you can lose your business really quickly. And so my counsel is you don't have to be made of cash. And of course you want to invest as much as you can in the growth of your business. But don't be crazy. Keep a little bit of liquidity available to you, because not every bet you're going to place is going to go perfect. And you don't want to run so razor thin on the margins that a single error is cataclysmic to your business. So having a little bit of cash instead of making the error of not having cash can really save your business. Number 4, sometimes sellers, once they do make money, they start getting profitable, they forget about taxes. Do not forget that Uncle Sam is another important business partner for you. If you start making money, you're going to have to start setting aside some money to satisfy your tax obligations. Here's the way we do it. So I don't necessarily employ a pure or the profit first system to its full extent, but I'm a big fan of having a separate maybe savings account with my bank where, let's say for a quarter, let's say I made $100,000 in profit for a quarter. I'm going to go and take a third of that $100,000 and just put it aside in an account so that when taxes come due, I already have the cash and I'm never worried about whether I'm going to be able to make my tax obligation or not. I would encourage you to do something similar. And then 5th and finally, sellers are really good at staying focused on growing their businesses and sometimes they really stink at managing their finances, meaning they don't always have really good bookkeeping. I know this can sound self-serving because I'm a CFO and I sell bookkeeping services. I get that. But consistently over and over and over again, we find that the sellers that know where their money is going and are making intentional, data-driven decisions about their finances tend to perform better. They tend to have lower stress levels. They tend to get higher multiples on the market, and they tend to be a lot happier in general. Don't fail to keep your eye on this ball. The first business that I built was in a different industry, and I failed to keep my eye on the books and on the finances for about a year while we were growing. And I really regretted that for another year and a half as I dug out of a hole that I'd created for myself. Don't let that happen to you. Make sure that whether you hire a firm like Seller Accountant or hire your own teammate or have your CPA try to do it, have somebody have their eye on your bookkeeping ball. Obviously, Seller Accountant would love to help you with that. If this is a need of yours that you're considering outsourcing, shoot us a message. We'd love to talk to you and see if we can meet that need for you. But please don't make these 5 errors. Focus on profit, expand intelligently, have a little bit of cash for hiccups. Don't forget about Uncle Sam and the taxes, and then make sure your books are good. And if you do that, you're going to have a great business. Take care, guys.